Welcome, ladies and gentlemen. Robert Roy here. Hope you all having an outstanding day today. Let's go ahead and make sure you all can hear me. If you would go ahead in your comments box and give me the 1 for yes, 2 for no. Just don't do 2 or I'll reach through the camera and have to slap you for lying. Fantastic. There we go. Hey, Voodoo, how you doing, man? All right, there we go. There are the ones. I know it takes a couple seconds. There's a slight little delay in here, but all is good. All is good. All is good. All right, so let's see. There we go. All right, we got our charts up in there. Hope you all had a good trading week, man. It has been an interesting one. I want to go take a look first at the S&P 500, and I hear it all the time. But, Rob, let's just go to the options, man. Just tell me what option to trade. I can't tell you what option to trade if you can't tell me, or I can't tell you what we're looking at on a chart first. So we've got some key things that we need to focus on. Let me take down this symbol grid here. And let's kind of keep going with it. All right, let me get rid of this orange bar. We don't need that one. The yellow one is a good one to have. So we've got our Fibonacci drawn. Let's see. Let me go grab a drawing tool. We've got our Fibonacci drawn from this bottom bar right there. And all I'm doing is just starting up a program so I can get a drawing tool. We've got this down here as the V bottom and a nice V top into the blue line. That came a couple weeks ago when we hit the all-time high at that 41.91, 31 level. And then we had a good pullback. We kind of up and down, and then 1, 2, 3, 4, 5 days ago, including today, this chart shows today, 5 days ago, we got above this black line. There's a very strong importance of that black line, and that is a Fibonacci level, and it is the 41.81 level. Right now, that is a key fib level. You will not hear most traders talking about this. They really don't understand it. It's not something that they're focused on. But if you see what's happened in 4 of the last 5 days, including today, everything except yesterday, we have been pinned between these two lines, right inside of there. Up and down, up and down, up and down, which makes for a very tight range. Yesterday, great day. Today, we gave it all back. We're right back where we started on Wednesday. We're back about at the same exact price right now. So there's a lot of pressure building up in the market right now. VIX is still low, which is great. We've got a low VIX, right? Let's bring that up. We're up a little bit today. We're at 18 and change, which is nothing in the grand scheme of things. You know, we go back, you're not going to read the numbers, don't worry about it, but this is 85 up here in the height of COVID. You go back to the height of the 07 debacle, it was 89 and change, all right, with the housing mess that we had. And then we get back in on it now, we're at 18. We're still at a fairly low VIX level. So we're not seeing overpricing of options. I have noticed on some positions today, a few that had on the options wider spreads, which again is the market maker just saying it's Friday. I'm uncertain what's going on. The big gap up yesterday, the pullback today. Yeah, let's just go ahead and protect ourselves and kind of not give people an opportunity to take advantage. We'll capture some extra premium. So in case we're wrong, we've got a little bit of a hedge factor or fudge factor inside of there. Right? So when you look at the S&P, you look at the VIX, all good, nothing bad, right? There's nothing wrong with S&P 500 when you look at it. It's just we're so used to the move that we have had up, this great run. We're like, wait, what do you mean we only had a move today of $3 to the upside or $4 to the downside? Now, granted, today is a $28 move because we gapped back down, right, to that 91 level, that 41.91 level. Right? We've got a good confluence with the 8 moving average. So the stars are aligning, but it's pressure that's building up in there. And I thought yesterday was the breakout. I'm happy to see us retest. I just would rather have not seen it be a gap down for a retest today. I would rather have seen it gradual movement back down to that 41.91, 41.81 level. And even to taking a day or two, maybe 3 to get there. Right? So we've got just, it's a steady flow because when you start gapping from Wednesday to Thursday up here, give it all back and then gain it back by the end of the day. We gap again Thursday to Friday. There's no comfort for traders in there. You know, I talk about it with my students. I talk all the time about there are 3 positions to a trader's chair, right? The very first position is this one right here. You're sitting back. I'm a little further away from the mic, but my hands are behind my head, which means I can't reach the keyboard. And this is just kind of checking it out phase. I'm not doing anything. I'm not trading. I'm not pressing the button on whatever company I'm looking at. And that's about where I am right now. There's not a lot that's exciting me going, oh, we should chase after this. You know, we did a great Amazon trade yesterday, which I'll share with you guys in a little bit. But there's not a lot of trades like that out there. When you get, you know, a company's up $1 or $2, there's not that big a deal for what I'm looking for, right? So that's the first position. Second position is sitting straight up in your chair and you're focused. Third position is I'm leaning forward, I'm placing the trade, right? But this position right here, I spend a good part of my day with my little smiley ball, which has been redone with magic marker because I can't find another one, and just play it off the wall as a distraction while I'm waiting for the market to set up for what I'm looking for. So I don't have a lot of, this stock is doing phenomenal today, because we're not in that mode right now. The markets are flat. Pressure is building. We're waiting for the breakout. The ideal breakout that I would like to see here is this. In an ideal world, I'd like to see us move up, close, come back and retest and bounce, right? That's what I wanted from yesterday. Today we had the pullback and we are closing, or looks like we're going to close near that 41.91 level right here. If that is the case, if this is actually our pullback right here, then if we can get the bounce on Monday, there's a potential opportunity to enter. Now, there is some resistance above head. 41.91, 4,200, all resistance levels. And then 42.1880, we'll call it, which is our all-time high from yesterday, right? So we've got some resistance in there. But if I can get the pullback, the bounce, and have an entry opportunity, there may be only a day trade, and I'll take it if that's all it is. But there are some companies which I do have 7 or 8 potentials for Monday for you. I mean, one of them was from last week. We did, Booking. If had you done that Booking trade that I shared with you guys last week, you would have crushed it. Booking did amazing in the last couple of days. So let me go check out Dogecoin. Yeah, Stevie. The biggest trade I've ever done in my life was when I had absolutely no idea what I was doing. A friend of mine called me and said, "Dude, you got to put some money into this Bitcoin thing." I had no idea what he was talking about. He showed me how to open a Coinbase account, put money in on a credit card to start, sent some more in later. And I bought Bitcoin when it was around $1,200. Right now, I'm out of it for the most part at this point, but I got out about just about 40 grand, 45 grand, something like that. I forget the exact number. I know it's gone higher, but I'm not the guy that is chasing after coin, especially a coin named after somebody's dog, right? Came out as a joke. But my daughters, both my girls' boyfriends, are both very heavily into this. One of them bought it at 8 or 10 cents. He held it to 50 and then watched it come back again. But he's got a decent move in there right now. I think what was it, like 30 or 40 cents the last he told me, right? Apple. Yeah, Apple's interesting. I'm in a position. I'm in a long position on Apple. I've got a leap option, so I'm out into January. I think Apple's got some great things going to happen this year. Hacks, that's interesting. This is the clearest chart of any I've seen. I was sharing this. I use this chart all the time, right? And I use this along with TradeStation. TradeStation is my actual trading platform. And a student actually that found me from here, that follows me now on some of the things I do on my own website and trainings, said, "Rob, why do you use both? Is it just you're just used to it?" And I said, "No, it has the crispiest, I don't know what word. It has a very crisp, how about that? Very crisp charting engine. The graphic interface is phenomenal on this program. I don't like TOS, which black really isn't black. And then they've got what do they call it? Not historic black, but something about their older version black, which is also, it's more whitewashed than it is black. So really not for me, all right? I like the white on this, but on TradeStation, I don't like the white. I like the black on the TradeStation. So I'm glad you like it. HCMC is exploding. Why do you think it's gapping so hard. Oh, Amos, you talking about the gap yesterday? Because right now it's not, I mean, that's all we had was that one gap. Okay, so let's see. Let me go take a look at some of the, you guys dropped in a couple of symbols there. So let's go look at Apple. All right, so Apple, I mean, this is where we're at right now. We're down below our 8 moving average, which is the pink line, and we're down below our Fibit, which is, again, a Fibonacci level that you are, unless you have followed me, you're not familiar with those. There's something that I have developed over the last 20 years of utilizing fibs. I like the overall pattern of Apple, that good strong move up, the pullback to the 132. We had a higher high yesterday. We pulled back again. I'm not concerned about breaking the 132.22 level, this horizontal line, but I will be concerned if we break the 21 again, which is the green line. So if we close here and we bounce, no harm, no foul, but we're going to need to see some recovery take place and not continue that push down on Apple. So if we get above the 8 moving average on Monday, which is that 133 level, you know, I'm all good for it. I like it a lot. All right. Hertz Scramble also mentioned TXN. Guys, I do the best I can with your pseudonames. All right, so TXN, I'm ready to play it bearish. That's for sure. Let's see. We got this and this and this. Okay, let's go here. You know what? Let's go draw Fibonacci. I need a new fib on this. The easiest way for me to do it is to lay it out. All right, now let's try that again. Let's get rid of the mouse. So great V bottom right here. We got this nice move up. We went right in here sideways. We took this gap, kind of a little hook in there. So what I would call a little, just a little bit of a pullback, a little retracement there. Nothing crazy, nothing that broke the pattern for me. Good strong move up, and there's my V top. So I can identify based on this where my highs and lows will be on my Fibonacci. So I will grab the Fibonacci support and resistance tool. I'm going to draw my fibs right in here. Boom, snaps right into that wick. I draw off wicks, not off bodies. I know some use bodies. For me, I was taught on wicks, and it's worked extremely well. We'll go back to the other template, which has moving averages on it. There we go. And, oh, yeah, okay. So if we could stay below this 179.68 level, right, I'm targeting that 175.45. So what do I want to see happen? I'd like to see it close a little bit lower today. So I'd love to see this close around 178-ish, whatever that is. I'm just guessing where that level is today. Close there, right? So kind of fill that candle in and close there. Monday, Tuesday, whenever, retest and fail. That's the entry with the target down at that 175 half level. So very nice. The question is, can we find anything from an options standpoint that works? Now, remember, just because the stock has options, that doesn't mean the options are any good. And what I mean by that is that doesn't mean there's options for what we're looking for. So I want to find an option that has at least, if I'm going to swing trade it, hold it overnight, I want at least 30 days. This has 28 days. You may say, Rob, that's close enough, but that's today on Friday. What happens when we get to Monday, when Friday went away, Saturday went away, Sunday went away? Now there's only 25 days left. We're pushing it a little bit. That puts this June 4th option with about 33 days left, right? So I'm going to come here and I'm looking for an option that has a 65 to 85 delta. Well, I've got that. Great. Now I'm looking for an option that has an open interest of at least 100. I don't have that. So this is a weekly option. My guess is, we'll check the next week, but my guess is we're going to have to go to the full monthlies, which are the strikes on TradeStation anyway that are in gray. We have no open interest. This is going to a party with nobody else there. I don't want to be the only one at the party. So we go to June. Aha, plenty of open interest, right? It's a monthly option. It's been out there a while. Life is good. Let's see. So we look at the option. I would be doing the 170. Well, actually, we're looking at put options. So I'm on the wrong side of the chart. So let's go back and check just in case I made a mistake. What do we have for open interest? Nothing here, right? Not enough. It's got to be at least 100. That's too expensive. I'm sorry, wrong side. So nothing here as far as open interest. Let's keep going. We'll check the next one. No open interest at all, zeros. And we'll come down to June. Aha, look at this, plenty of open interest. So we're looking at a delta of 65 to 85. I've got a 74 delta, which is the 190 puts. All right, so I'm just going to write it down because I will forget. The 190 put right now, we're looking at 1265 by 1295. Right? So the first question you've got to ask yourself, is that a good deal? Is that a fair price? How do I know the market maker is not ripping me off? Even if you got to look at the bid-ask spread and say, okay, 1265, 1295, 30 cents. I can live with 30 cents. I'm not worried about that at all. But is the 1295 or 1280, if you negotiate whatever the price is it a fair price? There's a column here, and you can't see the whole thing because of how big I made the text today, the font, to make it easier for you to see. But if you look at it, it says Theo value, which is the theoretical value. Theoretical value is what the Black-Scholes model to tell us, is the option fairly valued or not? So if we come over here and we look at the 190 puts, right? We look at the 190 puts. It's got a 73 delta. Our cost would be $12.95. We come over to the theoretical value, and it says the option is worth $15.17. So what does that tell me? The option is undervalued. So I am okay taking that trade on, right? That's how theoretical value as an options trader helps us. One way that theoretical value helps us, okay? So if I were inclined and we got the move I'm looking for on this trade, I would go ahead and I would look to buy the option. Always easy to do the example showing one contract. And I always try to negotiate on the mid price where possible. That option has a 1260 by 1295. So they're coming at 1278. Right? Is what they're saying the mid price would be. Right now it's 1275. So I would click on mid. It changed it to 1275. And I would hit place the order. I pull mine over where I could still see the order on the option chain itself to make sure prices have not changed, right? And then the thing I want you to get really good at, it's a lot different in the stock. Buy Apple. That's a lot different than buying the option on Apple or on TXN. So I want you to get really good at reading this out loud, right? And we've got the 18th of June, 2021, the 190 put. It says long, meaning we're buying at 1275. So we're going to buy to open 190 put at 1275, limit order for the day. We only put our orders in for the day. All right. Shows you what your estimated profit is, right? Max profit, max loss, all of that is in there, blah, 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 blah. But I have done this before where I wanted to do 10 contracts and I had 100 contracts in there. And by you just looking at it and hitting enter, here's what you missed out on. What I just did by reading it out loud was I was looking at it, so I saw it. There's my first sense. I spoke it out loud, so that's the second sense that I used. And I heard everything that I said. You're now using 3 senses in order to place this trade versus 1. You will cut your mistakes down by doing it that way. All right, now I'm not going to place the trade when we didn't get the pullback that we're looking for. All right, so talk to me. What do you guys think? What are your thoughts? Like it, don't like it, helpful? All right, so Michael said, do you know how the theoretical value is calculated? Yes, Michael, it's called the Black-Scholes formula. The Black-Scholes model is how it is fairly calculated, right? It takes the cost of borrowing money into a factor. It takes the interest rate. There's multiple factors built into the formula. I mean, if you look, guys, if you go and search for the Black-Scholes formula, crazy what that formula looks like. I used to, when I would teach live workshops before COVID, I have an overhead slide of it, and I put it up, and I would ask who in the room is an engineer, right? And when they would raise their hand, I would say thank you. For what? Just say thank you. Okay. And then I'd slap the overhead slide down, and it's this square root of the cube value of the North Star and all this crazy math. I said, that's for the engineers in the room. The rest of you, you never have to worry about how to calculate this. The engineers want to know how to do everything, right? How to calculate, not do it all, but how it's calculated, right? But it is the Black-Scholes formula that is the calculation, right? So, Michael, I hope that's helpful. Good, helpful. I think I better sell my Texas Bank 21 winning 2 calls and buy a put. So, Hertz Scramble, I know nothing about TXN. I don't trade it, all right? I am giving you a purely technical analysis here. But here's the thing. When someone says, Rob, how do we go about figuring out where we set our stop if we have an option, right? And I'm going to tell you right now that you're asking the wrong question. You have to ask the question not based on the stock itself, but if you bought the stock, let's say on this day right here at 192, right? The question you have to ask yourself is, if I own the stock, where's my uncle factor? Where's the point that I get out of this trade and call it a day? And just say, you know what? I'm done. I'm walking away. And it's not based on I own an option or I'm underwater $3 versus $4 or $1. That doesn't matter. What matters is, what is the chart telling you to do? Right? So if I go forward a day, I'm good. So for me, actually, I would look at this and say, all right, that whatever this line is right here, 189.13, somewhere down below that line is where I would be out of that trade, right? Now, that would have been my first target, so I already hit my first target. So now I would move my stop up, right? My stop would go up to roughly here, right? That's where my stop's going to be now. Whatever the next line, the next fib line is up there is where my next target is, okay? Let's go another day. Pull back. Let me see. The low on this day, 191.51, 191.52. I would have been stopped out of the balance of this trade. Had a great run into resistance, took my exit, called it a day on part of the trade, got stopped out, still made money on the overall trade. But watch what happens now. Right? And now I'm sitting there saying, oh, darn, I bought this at whatever, 189. I bought it at 189, and now it's at 185. How long should I hold it? Oh, whew, man, I feel so much better. It's back up again today. Oh, wait a second. It's back down. Oh, it's back up again today. Oh, nice. It's recovering. See, that was all fake. We got back into where we belong, and very well might be. But you paid a hefty price of holding on to that position all the way down to that 185 level when you got in here at 189, not knowing if this was the end and it's going to drop another $3, $4, $5, right? And then what happens? And oops, oops, and we get this huge gap to the downside. So does it look bullish to me any longer? I see the overall, well, the bias is bearish to me, but I see the overall pattern of the trend is down, right? My tops are down. This gap just skewed everything in there, all right? But that gap was enough to say, for me, if I got in at 185 and now I'm at 179, I mean, I got in at 189. I'm at 179. I'm $10 underwater. So use the stock. Don't worry about the option. Use the stock to say, when does it break my support level that I don't want to be in this trade any longer? If I can get you to not focus on hitting home runs and get on base a lot, you will do so much better year end than you will ever do trying to, again, swing for the fence over and over again. So Jacques said, what platform are you using? TradeStation. I use TradeStation. I use TOS. This is it's called Trade Navigator. It's a proprietary version that we have available to us only at WealthbuildersHQ. Black-Scholes is complicated, Alan, and I don't want to know about it. Oh, wait a second. Webcoin dropped it in. C equals, yeah, I know. Just it's a lot nicer when you look at the graphic of it, Webcoin, right? When you see that square root thingy going on there. So Voodoo's asking the Visa June 2021 240 call. I'd like to know if I'm charting and selecting the option right. So if we look at Visa first, right? Let's do that, Voodoo, right? We look at Visa. Bullish pattern. There's no question. We're in an overall bullish pattern. I want to look at what earnings did. Earnings propelled it the next day. Very nice. I'm not too worried about the pullback. We're really not making it to the 8 moving average, the pink line. We're really relying on the 5, which is a little steep, a little fast for me normally, but that's what we're working off of right now, okay? If we close somewhere between here and the 5 moving average, Voodoo, between, for today, and we can bounce off of either the 5 or the 8, the blue or the pink line on Monday, now let's go take a look at an option chain and see what to do. Oops, not XV. So you're looking at the June 18. So the first question, Voodoo, is how long will you be in the trade? If it's a swing trade, then you're good. You're out far enough, June 18. If it's a day trade, I'm using the shortest available time that we could do. So I'm going to go immediately to my delta column, right? Let me just take another look at the chart. I'm going to go right to my delta column. I'm looking for that 65 to 85 delta. So let's go find it. And I really want to be closer to 65. And the reason for it is cost. I can buy a 71 delta for $12. I can buy an 86 delta for 20 and a half. I'll go with the 12 and a half. I'll take that. Plenty of open interest that needs to be at least 100. So I would be picking the 225. What did you wind up putting down there? You put the 240. So you're buying an option that is very much out of the money. You've got a 38 delta. What the delta tells us, guys and gals, is every dollar the stock moves, up or down, it doesn't matter. That's how much your option is going to move. So if you have a delta of 70, for every dollar the stock moves in your direction, you're going to make 70 cents. If you have a delta of 38, every dollar the stock moves in your direction, you're going to make 38 cents. So it's not that there's not a rhyme or reason for it. I choose an option based on what fits my risk profile, not what fits my pocketbook. If I look at that and say, $12 is too expensive for an option, no problem. I have zero issues with that. Go find a less expensive stock and trade that 65 to 85 delta. By trading the out of the money option there, you need a much greater move in your direction to break even. So that's the only fear when you start going down to those options. Really tight bid-ask spreads, which is awesome. Up here, 40 by 75, not too bad. But this is the 240. I think you had 240 there, right? Yep, 240. Very tight, 15 cents. But I would go, for me, I would go with the 225. Let's see. All right, let's see. Using the 1 year, 1 day chart on Visa. Okay, yeah. So I use a daily chart. Right, my daily chart is this right here. I'm zoomed very tight for you guys right now, but normally that is the view that I take on my chart. Is somewhere between here and here is the view that I take. Visa, great moving company. They're going to step into the crypto world for sure, as all of the credit card companies are. They were the original crypto. They were the currency that didn't have a currency backing it up. Right? You're walking into a restaurant saying, here's a piece of plastic. Let me have dinner. XII said, I doubt Texas Instrument goes lower than 173. If I'm wrong, then it should reverse the low 160s, worst case scenario. So and I'm not disputing that it doesn't reverse at 160. The problem is we then would have, from the move that we made here, that where we drew this Fibonacci, if that's the case and we go down to 160, we have a 100% pullback in that trade. All right, here, watch. Okay? You're walking down the street and you look up and you see there is a moving company and they are hoisting up a piano. And as you look up, you realize the rope just broke. What's your first reaction? Heck no. Get out of the way, let it hit the ground, pick the pieces up later, right? It's no different with my stock. If the stock is in a fall, let it fall. When it gets back to a positive point, I'll buy it there. But Rob, if it goes up now, I'm going to miss it. You know, you're going to miss things like this all the time. Excuse me. Here. Guys, let me show you this. This year, the last date was 4/27. We have 138 lines in here. The first 3 lines are headers, right? So that means 135 trades taken this year. Okay, 135 with this particular service that we have called Power Option Plays. That 135 trades we took, I guarantee you there was another 135 we never touched. We never touched. Why? Because I will take a very high probability trade, not a higher risk trade. I will pass, do less trades, be less stressed. I don't have to trade all the time. Be less stressed and have a better chance of being right. And most of my trades, if it's not a day trade, obviously day trades, I'm in, out the same day. Most of my trades, my first exit comes in within 2 to 3 days. Here, let's see. Adobe. We got in on the 31st. First exit was on the 31st. The next one was on April 1st, and the last one was April 19th. Booking. We got in on the 29th. Our first exit was the 9th. So it's a little bit longer. My last exit was the 20th. Right? If you look here, here's Roku. We got in on the 23rd. First exit's the 24th. Second exit's the 26th. Last exit's the 31st. All right? Here is Facebook. We got in on the 29th. We got out on the 29th. We got stopped out of our last contracts on the 30th. My goal is not to be long-term before I hit a profit. My goal is to try to take profit within the first 2 to 3 days on my first exit. I have a very varied exit system that it has 4 tiers of exits associated with it. Okay? So I'm not trying to hit the home run. I'm not trying to catch that falling knife or falling piano. Get out of the way, step away, let it make it back up above that 189 level, and then I'll jump in. But Rob, what if it goes up and I miss that? Okay, I missed that. I'm fine with that. But going up, I don't have a clear path right now. I've got a lot of things in my way, moving averages, the overall pattern being bearish. Heck, I don't believe Texas Instruments going to 0. Right? Could it stop at 160? Very well might. My guess is it probably comes down to that 175 level before it bounces. 175, 173 is probably where I see it going to and bouncing from there. But I'll trade the downside on it then and buy a put option instead of buying a call and take advantage there. Yeah, swing trade for sure, Voodoo. What do I do? What I can. Okay, so let's see. All right, so what stocks? So Miles saying, what stocks do you trade daily and how do you determine what to buy, call or put, strikes, end dates? Okay. The simple answer is here. I will just give them to you. I don't know how well you're going to see them. I'll read them off. No, you know what? Let's do it this way. That'll be easier. I already have the spreadsheet here. Where'd it go? Oh, I moved the spreadsheet to another page. Okay. That's the symbols right there. S&P 500, that's just that, the SPX, right? Apple, Adobe, Amgen, Amazon. Take a screenshot, guys. Baba, Booking, Chipotle, Mexican Grill, Facebook, Google with the L. The Depot, Home Depot, MasterCard, Netflix, NVIDIA, PANW, PayPal, Roku, the Spiders, Tesla, United Healthcare, and WDay. 20 stocks, 19 stocks, 1 ETF plus the S&P 500, and I look at the VIX every day as well. That is my candidates of what I trade. So I just answered, Millie, 90% of your question in 30 seconds, right? That's what I trade from. Why? Because I know these stocks. I have built a very good friend of mine who's co-author of a book called Candlestick Charting Explained, Ryan Litchfield, talks about creating a dossier on the companies that you trade, right? And getting to know everything about them. The way I describe it is I know how my stocks eat, how they breathe, how they drink, how they sleep. I know everything about these companies, how they react around earnings. When a certain pattern sets up, I say, I've seen that before. I'm very familiar with that. I know exactly what's going on there. Excuse me, summertime allergies. So I stick to the same 20 companies most of the time. Most of the time. Last year, we had an 82% win rate on our trades with those 20 stocks. Whether it's buying a call or a put is all based on bias, right? It's all based on the bias of the chart. So when we look at the chart, right? I look at this, that's bearish, period. The moving averages are down below all of our moving averages. I'm not trading anything bullish on this unless it's a quick day trade with the right setup, right? If I go to Apple, right? Apple right now is in a bullish neutral bias. It's down below the top moving average, but above the second one. So I'm still bullish, but it has to get above the pink line in order for me to trade it. Amazon. Boom, home run. I'm buying a call option on it. But Rob, it's coming down. I'm not trading it to the downside. The pattern is bullish. Again, if you want to day trade it, by all means, day trade it. I'm okay with a pullback on the day and picking up there, for sure. I mean, we traded Amazon yesterday off of the intraday bounce of this 34.41 level right here, right? Watch. If we go back, let's go to Amazon. Here's the 31.41.42 level. We gapped up. Beautiful. No trade for me. We wait. We come back down. We close right at that level, just below it. We bounce on the next candle. Either that candle or the one after as the wick stretched down. You know what? Let me do this. I know sometimes a little harder to see if it's too small. Right here. Either we took it on this candle on the bounce, or you could have taken it here if you were a little bit more skittish about it. And we're talking about taking the trade on Amazon at 34.43. Let's call it 45 just to make it easy math. If we went to the end of the day, Amazon closed at, let's call it 70, 45, 55, 60. That's a 25-point move with a 70 delta. We're looking at, $7, $14, $19,000 on one contract. Now, you're spending more money on Amazon. Don't get me wrong. It's an expensive position. But we bought the option that expired today. All right? We bought what expired today. So I'll trade it in the opposite direction. But I'm only going to do that if I'm day trading it in and out. As far as dates, if I'm day trading, I go as short as possible. If I am trading longer term, at least 30 days of time. Excuse me. Okay, so let me see. XII said, not even trying to call the bottom or catch a knife, just giving my opinion on where there could be a price. Oh, look. Oh, I'm not faulting you for it. You may know more about, remember I said building a dossier. You may know much more about Texas Instruments than I do. Not my TXN, not my company, right? I'm not saying that you did anything wrong. Just for me, that's what I look for, and why for me I would say I'll wait for this because of that. That's all. Trading strategies change in low volatility. Yes, absolutely, Alan. We talked about that last week of the strategies to trade in certain market conditions. Like right now, in this market condition, all of my selling premium has dropped dramatically. I was crushing it on covered calls and naked puts, crushing it, right? I'm talking about 1, 2, 3+% a week on a covered call, 5, 8, 12, 15% a week on a naked put. You're not getting that today, right? That's not available, okay? I was just looking at some Amazon long calls this morning. Yep, there you go, Eric. I love Amazon. It's my favorite company to trade. Okay, so Average investor saying, what moving averages do I use? 8, 21, 55, and they are all exponential. Risks and ideas. I love your strategy. Work with what we know best. Yes, that's all you can do. What do you know? Is that TAP, Eric? Let's see. I don't know what the dollar sign is. Is it an index or something? That's tick. If it's TAP, TAP, let's see, who is this? Oh, of course, okay. All right, first thing I need to do is redraw a fib. Fibonacci that I have is a little bit old. Actually, no. What am I talking? This fib is fine. Nothing wrong with it. We didn't violate yet, so we're good here. Okay, let's go back to template number 2. So again, look at the move we had yesterday. It's hard for me to say, let's enter a trade. You know, we missed the move, right? Darn, I missed the cruise ship I was getting on today. I missed it. It pulled away from the water. Let's jump in the water and try to catch up. No, let's wait for it to come back to the dock, right? Let's wait for the stock to get back to the dock, come back to the moving average, give me a bounce, and I could take it there. Break above the next fib line, retest and bounce, I could take it there. Trying to take something here at resistance. Now, could you day trade it to the downside? Possibly. I prefer to stick with the trend, but if you're more experienced in the market, you can trade against it. Got it, XI. Appreciate it. Let's see. Trip. Guys, I did Trip not long ago. Trip Advisor. I did this not long ago in a... Sorry, guys. Just terrible allergies today. I did this in a video not long ago for something called Trade with Rob. Guys, could you drop that in there? The Trade with Rob. And Trade with Rob every week, 2, 3, 5 times a week, I send out a video. It's short, 3 to 4 minutes long. We're done. And I'm talking about, here's where you enter the trade. Here's your target. Here's your stop. Boom. Right? Go. And it's a piece of cake. But I only do it when the market gives me the right candidates. What's happened this week? We've had very few this week. Why? Because the market's giving me nothing. We've been, what's that medical term? Flatline, right? That's the market, except the gap yesterday. And who in the heck is going to guess that that was happening yesterday? Guys, it's a free email that we send out. All you have to do is give us your email address so we know where to send it. And you'll get a couple of them a week. So go check it out, guys. Let's see. So a bounce on Trip. It's bouncing down. You got earnings coming up. I wouldn't touch this with a 10-foot pole until you get past earnings. And as far as a bounce, I don't see anything that's a support level for a bounce. We've got, a short-term support here. But if you want to go and use that as your basis, you darn well better be talking about that too. Where your tops are coming down. You've got an ascending triangle. If this triangle plays out the way it's the average trader thinks it will, not how I think it will, but how the average trader thinks it will, that's where you wind up, down at about $30. What do we have here? $17, $17.54. So I think we drop about, if I'm right, and it does break, we drop about $7. Right to about there. But you've got earnings. That could change everything. But if earnings weren't there, I would not touch this as a directional trade until it either A, breaks above the recent swing high, the lower high, or breaks this lower level and look for that next move down is what I'd be focused on. Let's see. Thank you, Muhammad, for dropping that in. I appreciate it. Perfect. I'm running along calls on tap. Looking to take profit and possibly rebuy it lower. There you go. Yeah, I appreciate the likes and the shares and all that, guys, and certainly the going to that, tradewithrob.com/go. You're welcome. Let's go look at U.S. Steel. Got in there. So where are we with U.S. Steel? Yesterday we were okay, right? We had just broken down the moving averages barely. Right? We got higher high from the previous high we had, and then today we gap all the way down here. Now, if we can close back where we are now and have a higher close than yesterday, I'm okay. Get above the 8 moving average, which puts me at about 23. You don't have a lot of room. 24.5 is your first resistance level. From there, it's 26.5 is your second target, which is a 2 standard deviation move. Most of your trade will end by that, unless you are an investor and you're holding very long term. Let's see. Okay, well, I mean, listen, you go long, you go short. When you think it's right, try. I'm just not saying it right. Fables of Europa. You go short and long when you think it's right, not when somebody else does, right? I make sure to trade off of my what fits my risk profile, not what fits somebody else's. So if you've got an idea and it's how you trade and your trading system has good results, then you're going to want to take advantage of that, right? Our trading systems, my trading system has good results. Here's just go to the last trades. W Day, we made 780. MasterCard, we made 1170. Booking, horrible trade for Booking. We made $3,900. Chipotle, we lost 780. Amazon, we made 19,000. Tesla, we made 7,000. 1,500 on the SPY. 390 on Amgen. Right? We lost $3,000 on PayPal. We lost $5,000 on Nvidia. Right? You're gonna have trades go against you. Just get used to that. Right? Just get used to that. Don't worry about it. Last month was 47,000. The month before was 116,000. I'm really not too worried that some trades are going against me. Right? It's part of the system. It has to work. If somebody tells you nothing goes against them, they lie. They lie. Let's see. Thanks, Ahmed said, thanks for the info. I had multi-call options on INO strike $11. I have 1 month to go. I have it a month ago and expires in August. What do you suggest now? Trading around 7. So let's go take a look at INO, and you've got a call option. All right, so let's see. And remember, I don't give advice. That's not what this is, right? You have to make the ultimate decision. But if you own this from 11, right? So you own it somewhere around here. Do you say when you bought it? When did you buy it, Ahmed? When did you pick that up? Right? Because if you have this now for all this time, you had this pullback, the move back up into the moving averages. You got the fail, the test again, the fail, and this wasn't earnings. I don't know what caused this. If it, you got to confirm it, but earnings is showing out here. But at this point, I don't see it getting back. The question is, where does it go from here? I mean, there's been nothing about this for me, my risk profile, that's very exciting, right? So I don't know what your options are worth, and it's a call option. So can you turn it into a bear call spread? I don't know if you're going to get enough premium on it. Probably not. No, it's not going to work. It's not going to work. You won't get enough premium on it. It's too far away. So Robert said, are the option plays that you just showed naked calls and puts or a different strategy like vertical spreads? Nope. They are all, every one of them, Robert, buying calls, buying puts with the exact same strategy that I showed you right now. If I put an INO, right? Was that it? Yeah, INO. Okay, Ahmed. Right? If I was looking today and I was day trading and it is 2:50 in the afternoon, I'm looking at today. I've got an 88 delta And in 94 delta, I'd probably trade if I was going to trade this, I would trade the 94 delta, buy it for 87 cents, right? Boom, go. All right. If I'm day trading, if I am swing trading, I'm going out at least 30 days. So I'll come to 35, no open interest. Let's go to the next one. No open interest. Let's go to the next one. Enough open interest. I got 141 contracts of open interest, $70 delta, 139 by 184, big bid-ask spread. So I'd have to pay 184. I'd negotiate the midpoint about 162 or so, 165. I would negotiate it, and it's got a fair value, a theoretical value of 152. So if I pay $1.62, it's worth 152. I'm paying a little bit more, but not crazy, right? Again, if I'm just looking at calls, if it's bouncing and going up. So every one of those trade setups that I shared with you, Robert, from here, we're all directional trades. We bought calls or we bought puts, right? And that you could tell if it's calls or puts based on this. U is for up, D is for down. If it's a U, we bought a call. If it's a D, we bought a put. Right? Bullish is U, bearish is D. And you can see most of what we've done in the last month. I'm trying to keep it all on the screen. I can't. So, but most of this in the last month, 1, 2 bearish. There's another one. We had about 3 bearish trades last month. That's it. This month, for the last month. Everything else has been bullish. They've been directional trades. They're all both calls or puts. Appreciate that, Hunt Scrambler. Thank you for that. Excellent. Good. Alan said, thanks, Rob. Great. Signed up. There you go. Fantastic. Let's see. RCAT. We saw that already. Okay. So let's go look. I got 1 or 2 that I want to look at, guys, before we wrap it up. So let's do that. Let's make it a lightning round. Let's get back into an F5. No. Robert, no. They're not naked calls. I'm buying the calls. No naked. Do not get comfortable holding naked calls overnight. I actually want you to go to bed with a naked call and wake up and screaming at the top of your lungs in fear. That's how dangerous it is especially if you can't afford it. How high can the stock go? Unlimited. That's your risk. Unlimited. Do not do naked calls. We are buying a call option. We buy it for 6. We sell it for 8. We're buying a put option. We buy it for 8. We're selling it for 9. Right? Or we buy the put option for 4 and we get out of it at 3. We lost money on it. It cost us money. I'm not looking to sell that option. I'm looking to buy it. So we're spending money on it. Yeah, naked call, naked put, much different strategy. Much different strategy. Whew. Okay. Woo. So Adobe, ADBE, write it down, guys. Look where we are right now. We're down below that 513 level. That's the key. Right now, nothing else matters. There is no try to get in early. Ooh, if I just get a small move up. No. Close above 513, retest the 513 and bounce, and 525 is your target. There is a confluence at that 513 level. 513.09 is the exact number. My 8 moving average is there. Give me the press up. All right, give me the press up, the retest, and the bounce. Take the trade there, and your first target is right there, just under that 525.5 level. All right, so that's Adobe. Wrong key. Booking. Bigger picture so you can see more of the Fibonacci. I'm going to take this down for now. We don't need that anymore, right? I love the pattern, right? Where are we sitting? At 2450? Where's the moving average? 2450. This is the perfect storm, meaning the setup is right there. What do we need to have happen, right? We need the bounce to take place. Keep in mind, you've got earnings coming up. It's a day trade. You're not holding this overnight. Make sure you're checking prices comparative to the fair value. You're going to have larger spreads. It is booking. You're not going to have enough open interest. It is booking. It's just the only way you could trade it, right? And it is not for the faint of heart, right? Cool, good. In the draft, glad you signed up for it. Yeah, I'm sure this has been recorded, DVG. Absolutely. Benzinga records it all the time, right? So we're looking for the 25.30 as our target if we get the bounce. Google is our next one, right? Now, where's the moving average? Not near the fib line. All right, so if I had to give it an ABC, I'd give that an A. The moving average, the fib line are sitting right on top of each other. Awesome. All right. If I go back to Google, right? We're sitting on the fib line, but my moving average is here. So this gets a B. It's not as strong of a setup. It's always better if I have confluence when I take an entry. Not for an exit, but for an entry. All right, let's look at Home Depot. Home Depot was sitting right at the moving average. It's not too far off of the fib line, but we're not sitting on top of each other. This would get a B as well. This would not be an A. It would be a B as far as the setup goes. 328.67 is our resistance. And just look, I mean, Home Depot is the epitome of what I'd love to see my stocks do. Just every day, chug. I think I can. I know I can. I know I can. I know I can. I know I can. Just small movements every single day, right? Love the pattern. Not my favorite of the setups, but it is a setup that's got an opportunity. SPY. Notice every one of these are on my list, right? So this is 1, 2, 3, 4, 5 of my 20 positions that I just gave you that are all setting up. Why do I trade those 20? Because I can find trades every day on them. I have students that trade 3, 4, or 5 of these only, and they trade them almost every day. One of them, not necessarily all of them, one of them almost every single day. Right? You don't need to trade all 20 stocks. SPY, there's a confluence of the 8 moving average and the 417.91 level. Right? We're talking about a difference of $1 between the moving average and the fib line on a $400 position. So what do I want to have happen? Move up. This should get boring. Retest, bounce. Take the entry there. Here's target 1. Target 2 is a little bit higher. It's the red line that's hidden there. I'll share it in a moment once I get rid of the drawing tools. So target 1, I'm going to be out of this trade. If I can get the move above 118, I'm going to take my exit probably about 422. Half of the trade. The second half of the trade right between 426, 426 and a half. And we're talking about a stock that I'm going to looking to get in around 418 and a quarter. There's a nice opportunity. And the options are usually very, very fairly priced on SPY. Johnny said, I just got into trading. Wish me luck. Johnny, I'm going to tell you what kind of luck I wish you have. I wish on your very first trade it goes against you. Here's why. Johnny's like, I want to crawl through the camera and slap you. Here's why. I have had so many traders come through my trainings, Johnny, that win on their first trade and like, man, I have got this thing down. Throw it all at it and get crushed. So right now, what you're doing, Johnny, is you're placing a trade and you're stepping back and you want to see what sticks because you don't know what to do yet. And that's okay. That's the way you need to look at it. Johnny, follow along with some of the stuff that I do. I'm here every Friday at 2 o'clock, 2 to 3. I do my own trainings every week on Monday at noon on our website, right? Go ahead and sign up for the tradewithrob.com/go, which keeps streaming across your screen. It's pinned in there. You'll get free ideas of what to trade every day. And while you're learning to fish, I'll give you some fish along the way. All right? Fantastic. Good advice. I like your thinking. There you go, Johnny. Cool. All right, Spencer, I think we are done, my friend. Oh, not hearing you. You are on mute, at least for me.
Sorry, I said I don't know where Spencer is, but you got Aaron here. How's it going, Robert?
How you doing, Aaron?
Good. Yep, we are done. We got Zinger Nation trivia starting up, so that should be fun.
Cool. All right, guys. I will see you all next week. Go to the link and come to the website, wealthbuildershq.com, and we do a bunch of free trainings there as well. Every Monday at noon, we do a live training similar to this.
Yes, sir. Wealth Builders HQ. Happy Muhammad. He's got the link in the chat.
Cool.
And we'll see you next week, Rob.
All right. Thanks, Aaron. Appreciate it.
No problem.
All right. Bye.